Good morning and welcome to IGTV. I'm Angeline Ong. Let's get you across the markets because it's a huge day as we count down to that US CPI number. Coming up in today's program, markets on hold. As I mentioned, it's that CPI number that will potentially change the Fed's policy stance. Everyone wants to know whether or not those inflation sky-high consumer prices are starting to come down meaningfully. Airbnb share slump, bookings missed estimates, and Disney reports later on. Has Bob Iger made an impact though? Focus likely to be on him and whether or not his overhaul is working. Now let's have a quick look at the VIX. This is the best known measure of investor anxiety, rather, the CBOE volatility index, which is currently hovering near to 18-month lows if I widen out this chart for you. We did have, of course, blips when we had the fear of the banking crisis, but it has come down quite a bit now, easing as concerns over the US and the world economy also eases. Now, with 30 minutes to go until the European market open, let's have a look at how the pre-market is looking. Taking a look at the FTSE 100 for you. This is the FTSE index, of course, called the FTSE 100 on the IG platform. And we are looking at a slightly positive open indicated here. Same story, I believe, for the DAX. Let's check on that as well. Yes, that's being echoed by the Germany 40. And as well, the France 40 is the other one we look out for. This is the CAC 40 on the icon and also on Bloomberg, but otherwise known as France 40 on the IG platform. And there you have it, a slightly positive open indicated as we count down to the European Open. Now, overnight in Asia, it was a cautious picture, slightly mixed picture there. Singapore settling slightly lower, the Hang Seng slightly higher, and the S&P ASX 200 settling slightly higher there. Australia seeing its first budget surplus since 2008. Let's take a look at Wall Street now. Now, Wall Street had a lower close on Tuesday as investors became more cautious ahead of that CPI report and a meeting between US political leaders to discuss the debt ceiling. This is the annual conundrum for the US. Let's take a look at the early picture for you on Wall Street. Here's the ahead of the game picture, and Wall Street looking like we could see slightly higher open if those volumes hold. Now, as I mentioned earlier, everyone's watching that CPI number because it has the ability to create volatility in the markets and change investors' and traders' view of the Fed's monetary policy stance. The US Consumer Price Index is expected to rise by 5% in April on an annual basis, unchanged on last month. Core CPI, which excludes food and energy prices, is forecast to rise by 5.5% year on year after 5.6% the previous month. While hiking interest rates by 25 basis points last week, the Fed did also change the wording of its statement, signaling higher chance for a pause in the tightening cycle in June. However, Fed Chair Jerome Powell did reiterate that any decision remains data dependent. So it is hinged on the incoming data. Just looking at the dollar ahead of that figure, here you go. This is the euro dollar there, looking quite calm and dipping back into that 10,600 and 10,970 band there, perhaps to do with caution ahead of that CPI number. Also against the yen, we're seeing a consolidation there at around the 13,600 level. If volumes hold and we don't get any surprises, we could see that tick closer to the 13,600 level. So it's quite a cautious looking day ahead of that CPI number. As I mentioned, if there are no surprises, we could see a consolidation of the dollar versus the yen. Moving on to corporate news, ASOS has swung to a first half loss. The online retailer feeling the squeeze on household budgets, but said it was confident of a return to profit in the second half and beyond. The group reporting an adjusted loss before tax of £87.4 million. This compares to a profit of £14.8 million in the same period last year. Another one we're watching out for is JD Wetherspoon. This is the pub operator. It forecasts record full-year sales and its annual profit would be closer to the top end of market expectations. Let's try and get the chart up for you here. JD has been in the news very frequently because it has been, of course, hit by the lockdown, then supply chain shortages, and then people moving back out into the pubs as we see more and more people get used to socializing and going out again. But it has been quite a tricky time for JD Wetherspoon. As you can see that its shares are moving higher, although it has been a very volatile time for this particular sector in the last 3 years. The company said like-for-like sales rose 9.1% in the first 3 months of 2023 from pre-pandemic levels, and sales during the Easter week were the highest seen by the group. Moving on to travel, we have TUI as well in the skies, saying it significantly sees a higher operating profit in 2023. I beg your pardon, it expects significantly higher operating profit in 2023. This is helped by the strong bookings that it's seen for the summer, which has also been echoed by many in the sector. TUI's revenue reached 3.2 billion euros in the first quarter compared to 2.1 billion a year ago. Underlying EBIT swung back to profit at 88 million euros after a loss of 242 million. The world's biggest holiday company says bookings for the summer season are currently 13% ahead of last year. Now, in France, Crédit Agricole has doubled its net income to around 1.23 billion in the first quarter, beating expectations of 816 million euros. FIC trading sales jumped 42%, outperforming its bigger French rival BNP Paribas. Dutch bank ABN AMRO also beat analyst expectations with a 77% jump in first quarter net profit to 523 million euros. This was thanks to lower costs and also higher interest rates. Now, Airbnb shares fell 11% in extended trading on Tuesday. This is after disappointing earnings and expectations for the current quarter. The vacation rental company earned 18 cents per share in the first quarter, 2 cents lower than the analyst forecast. Revenues rose 20% to come broadly in line at 1.8 billion. This is in dollars. Now, during the first 3 months of 2023, active listings increased by 18% year on year. However, if bookings rose 19% to 121 million, they were lower than the 122 million expected. It also warns that the market it's seeing fewer bookings and lower average daily rates this quarter. And the big one to watch out for out of the US is Walt Disney, the biggest media company in the world and the House of Mouse. It's due to report after the close. With Bob Iger back at the helm, investors are curious to see what impact his return has had on the company's different divisions. The street expects earnings of 95 cents per share to be compared with $1.08 for the same quarter a year ago. Revenue is anticipated to rise by 7.5% to $21.8 billion. Now, in February 2020, the company decided to move on after 15 years at the head of the company, another Bob Chapek, the chairman of Disney Parks, became the new CEO, but not for long. Last November, in a surprise move, Disney brought back Bob Iger out of retirement in an attempt to boost profits and cap the swelling spending at Disney+. 6 months on, Disney shares have regained some 15%. Disney's last earnings report beat estimate thanks to its theme parks, but streaming services saw their first subscriber decline since launching at the end of 2019. Bob Iger announced thousands of job cuts, 7,000 in fact, as part of his strategy to cut costs. Also scheduled today, we're looking at for Robinhood Markets and Beyond Meat. Oil prices can't bring up the chart at the moment, but I can tell you that yesterday evening, US crude oil and gasoline inventories rose last week, according to the American Petroleum Institute. Crude stocks rose by around 3.6 million barrels last week as well. Gasoline inventories also rose by 400,000 barrels, but distillate stocks fell by 3.9 million barrels. And that's it for now. Do join me for all the latest updates when the markets open. We also have charting at 10:30, and this is the latest. We'll, of course, have a special look at that CPI number and the impact when it happens as special coverage on IG. Until then, I'm Angeline Ong for IGTV.